and play the long game. This is what happens in family offices, by the way. This is the difference between the affluent and ultra wealthy and just regular people. Is regular people, regular folks think, most of them short term now because that's how we've been programmed. But even if they think long term, we think in our life and maybe our children's life and maybe grandchildren. Family offices think in generations. They think 4, 5, 6 generations from now, what does it look like? One of my team members put this together, and he's under 30, so he was playing around with numbers and just got married. And he was like, how do I hack this system? Let's say if we had kids at 30 and every single following generation had kids at 30, what would it look like? But I thought it was just interesting because you're the first generation had kids at 30, and then they had kids at 30, and then the grandkids had kids at 30. And now here's 4 generations. By doing it that way and putting life insurance policies on every single family member and funding those policies, this family has 138 years of compound interest, uninterrupted compound interest, tax-free in 4 generations. 4 generations. Think about that. Think about that big picture for a family. Now, everybody then looks at the Rockefellers and they're like, how do they just get wealthier with each and every generation? Because this is what they do. They think big picture. They have uninterrupted compounding interest. They have a family bank set up and structured with life insurance policies, like the one that I just shared you, which forms the basis from which every family member borrows, and they repay the bank. And if they don't, they pass away, and then the family bank gets replenished with a death benefit, tax-free. So it's pretty powerful stuff. So there's a couple of things that you could do with this. Emergency savings. So what we do in our family, so we have 11 of these policies. I just set up one, my final one in December. So again, I went through the same exercise as every single person that reaches out to us at Producers Wealth go through. Where do you keep your capital? And I can't come up with a better answer than that. So that's why I added another one, because of all these things that I just shared. So our 11 policies, we always have a minimum amount in our family bank for emergencies. It used to be 6 months. We've upped that to 12 months. And right now we're just trying to put away as much cash as possible in our family bank. The family banking strategy, which I just scratched the surface. I'm creating a lot of content on that because a lot of people are interested in learning more about that. Your own banking system, funding it, establishing line of credits so that you can grow your business and grow your investment portfolio. Tax-free retirement. Folks that are very nervous about the tax situation in the United States, you should be nervous regardless of where you live about the tax situation. Governments are bankrupt, all of them. There's approximately 200 of them. They're all bankrupt, all of them. So there's only one way for governments to find revenue. They're going to raise taxes. So there's a strategy for that. Universal Life Rescue. There were a ton of bad policies sold in the 80s and in the 90s. We rescue about 2 to 3 of them every month. Inheritance multiplier. That's part of the family banking strategy. Volatility buffer. Here's a story I'll share quickly. This is real life stuff. So in 2020, I had a client that she called me. She was basically in tears because they retired in 2020. Could you pick a better year? Really? In 2020, they decided to retire.